Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Wednesday, November 15th, 2023, about 6:05 p.m. Central Time, the day that President Biden and Xi have met. I think that's a great thing, by the way. I don't know what comes out of it other than a thaw, and that's important. You know, things thaw, they don't melt. There's a difference. So this is the beginning of what can they agree to. I have not seen anything yet out of this as to what's been done. There's been, so far that I'm aware, no joint communication, and that's fine. They have things to work out, and they will. But before President Xi goes home, he will have a joint communication of some type, and the two sides will work that out. We saw today continuation of the rally that began yesterday. You realize you've gone up about 650 points in the Dow in no time at all. Markets get ahead of themselves. I'd be very cautious up here. You don't abandon when these events happen and you say, Bollinger Bands don't mean anything, moving averages, overbought conditions don't matter. Nonsense. This is where they become more important, in my opinion at least, than they do when the markets are quiet. The markets got caught off guard. I don't think any analyst was expecting off that simple CPI number report. It's an important report, but not as important as the market took it to be, I think. And it did it. It made it a major event, and the market has said very simply this: the Fed is done. The next steps are going to be cuts. This was the event that sealed it. Today's PPI report wasn't bad either, so the market looked at that. Retail sales falling a little bit. We get jobless numbers tomorrow. Haven't heard too much from Fed people. They speak, but they don't say too much right now. I find that interesting too. So let's go to the chart action and see what we've got. First, you're up 1.97% at this moment on the weekly chart. So not bad, and you've certainly come shooting from under this 4,200 level up to 4,518, not even a correction. You can see it's been a one-sided event, and since the 26th or 27th, to be honest, of October, it has just been all up, matched right in with the more research seasonal study, 15 out of 15 years, that trade has won. We're not there yet. There's a key date they come out on. I won't share it here. Now, the market on this rally, nice. The pattern is still one of a lower and low, higher high, but you can see the vertical rise. It's been rather dramatic. And, if you get so far that you're up 20% off a low, the market will start saying, wait a minute here, now I got to see bigger money commit to markets. That happens. You got to always pay attention. You're getting a bullish crossover. You're about to see the 18-day average get over, and this is nice, the 200-day average. So that's going to be a big support area on pullbacks. The first support area on pullbacks will be around the 44.58, the 100-day average, and you're at a resistance point. You've already gotten up there, and you have a market that's embedded. This has been a beauty. When markets embed until the red line closes under 79, on pullbacks, the trade buys. Now, will they buy this 100-day average? That's going to be the big question. My instincts are they'll nibble at it if you can get back to it, and that's 44.58. It's about 60 points lower than where you're at right now. Got to pay attention and see if it can get there. Do I think the market's just going to run to the moon? No. Really simple. No. Am I bullish? Yeah. Until this reading is lost, I'm very friendly still. And the same's in the NASDAQ. This market has the bullish reading of higher lows, higher highs. It's been on a tear. It has gone from approximately 13,999. Just look at this rally to 15. What is this now? We're at 15,872. That's one heck of a rally, folks. In no time at all, without a correction. No correction at all. A vertical move that just took off. The traders that came in, what number do you think they bought against? Let's just look back like a history lesson in school. Was this not the first challenge of the 200-day average? I think that was a spot to cover all shorts. I don't see how you got a buy signal out of that, yet some people thought that. I didn't see that. I'd go back on whatever videos you've got, they're out there on YouTube with this, and they're all there. Take a look. I'm sure that I would have said the combination of the Bollinger Band 200-day average, I expect the pros are covering shorts. In the Dow here, embedded. Look at how you've just come here. So you've come from the 32,300 level, roughly, 35,014. Wow. Big rally, but more like the S&P, lower low, higher high. It fought a battle for a while at the 200-day average. Didn't even pay attention to the 100. Just went yesterday on through it to the Bollinger Band. Now it's stuck at the Bollinger Band. All three of these indices, until the red line closes underneath 79, on pullbacks, the pros I expect to be buyers looking for the market to go up to wherever the current highs are at that point in time. The Russell is not in that camp. It is in a camp where it has said just now goodbye to all the bearishness. Yes, it's had a rally. I think that it's going not very much further than 1853 to 57, the 100 and 200-day average. No, I'm not a bear there. But if you were next to me and paying me personally to guide you, and you were long, I'd be telling you, hey, dump a chunk of what you've got up there. We'll come back into the market when and if it allows. Why? Because that's a huge set of numbers, big, powerful numbers. If you threw the name off the chart, and that's what you got to do when you're a chartist, throw the name off. You go, no, that's not a pattern I'd tell somebody I'd buy. Do you want to buy there? Absolutely not. So what's wrong with taking money off the table? In the 10-year notes, nice rally, overbought, no trend, caught traders, no question about that, and back and forth action now, which is what the market requires. Same in the 5-year note. When we come to the dollar index, I don't know. I think this is where the pro money's covering their shorts. If they are short, they'll look at the 100-day average, and a certain group's going to say, it's not going to just go slicing through that, and on top of it, go right through the 200-day without paying attention to support zones. And I'd agree with that. But I wouldn't say it's a buy. I'd say it's nothing. It's had downside bias ever since back here, which was 1, 2, 3, 4, 5, 6, 7, 8, 9 days ago, including today, 10 days ago, 2 weeks. It has been underneath that number and had the downside bias. The way I teach charting, you were only looking for potential sell signals when you're under that, buy signals when you're over it. And we knew we had sideways action that could break out one way or the other. The trick was which way to catch it. I certainly didn't. Nothing I had on that type of work would have said try to catch it. In the eurocurrency, you're in a zone that if you were next to me, you get that elbow right in your rib. Why aren't you making a move in that market, taking some money off the table? And you would be telling me, Ira, you don't understand. We're going up here to 114, 110. I'm not giving up anything. I'm just going to keep adding on breaks. And I'd go, okay, do what you have to do. And you'd say, well, what would you do, Ira? I'd be taking money off the table. Should you take all of it? Yep. And you'd go, you're crazy. And I know that. All right, in the British pound, same thing. You get up to the first challenge of the 200, the 100-day average, you buy it. I think the professional money's taking money off the table. You're not embedded. You're not trending. You've had a surge to the upside. It's got to regroup. We'll take another look when it regroups and gives you trade signals. This was panic signals. You heard what I said. This was money panic signal over the past 48 hours. I think that part of the market is gone now. What about Bitcoin? Well, you heard me say the other day, I think the pros are looking at the market right here as the support zone, and it's instantly overbought again. It's up another 380 tonight. It's right at the upper Bollinger Band. Ethereum took off today to the upside too. Again, the markets keep waiting for the first ETFs based on spot. They'll go up on the news again, but you don't keep discounting the same piece of news over and over and over. Remember that. Brent versus WTI, they're both very comfortable settling underneath the 18-day average, which means the differential between the two could shrink away even further. Both are in downtrends and both are in oversold conditions. The markets have been in a downside bias, and they even got worse with it. Let me show you this. See the gray line right through here, and here's the gray. That's the 200-day average. The green and the 18, that's the 100 and the 18-day average. Today you got a bearish crossover. Should have no trouble going to at least the 80.56 zone, and then from there maybe even the lower number here. What do I think OPEC's going to do when their meeting's coming up? I think they're going to just say they're sitting tight with what they've got. You think they're actually going to say, let's give you more oil as prices are coming down? I think mentally they like to protect the $80 zone in Brent. In WTI, it's the same story, coming down, big production. The IEA says that the United States will have produced a record amount of oil. This is not because of Joe Biden. This is because frackers have got better technology, and I've explained that for the past 3 months. They're getting more out of each well with the better technology, but they're not drilling a lot. They're not putting a lot into their CapEx. They're not listening to Biden. They're just going to be able to get more with what they've got. When those wells run dry, you have problems coming. When we come to the heating oil part of it, you're getting a bounce in a market that is now coming out of being oversold. Which way's the trend? It's down. So I'm going to look for the pros to be trying to hit this market still. In the 283 zone, I think they'll look at the market there as a resistance point. To get there, you got to take out the last rally high of 281.58, and that means you'll be with that funny pattern where you have the downside bias. You have a market with higher lows, higher highs, and you just had another bearish crossover, which often leads to the market trying to make a low to the most recent low. We'll see if that occurs or not, or if this is a false crossover signal. And in the nat gas, I still am bearish. If you're producing all this fuel, getting it out of the ground, one way or the other, you're producing natural gas. That's just a phenomenon with it. And you can see how the market's staying down. I think the pros are still on rallies, interested in short positions, not long positions at this point. Because we had a wild 2-day event, and it was wild over the past 48 hours, pivot points on the third day typically come into play in a major way. I've watched them over the years, studied them, and what they do is you're looking basis a day's range before it. You put this on a chart. Some people use a 5-minute, a 15-minute, or a 10-minute chart. I like the 15 the best with it. But you get a center line. The formula does it for you. Then you get sell points above the market, buy points below the market. And it's an example. You fall down here. Traders are looking to be a buyer to get back to the white line. As it rallies up, they're trying to be sellers at these lines here to get back to the white line. It's about day trading, but I use it in another way besides that. I use it and look at it and say, okay, I want to put on a position long or short. I'd love to come in at these lower lines because I'm probably going to end up the day in better stead. So I'm looking at that, how close is it to the entry points I have off my normal ways, and I tie the two together. Momentum to me is everything with this, all right? So I use this with my slow stochastic study. And I teach you how I put it on the charts, how I work with it. It's a video series. You can see what I do. And by the way, sometimes people will write me if they're my subscribers and they'll go, hey, can you show me how you're using this? I do little videos and show them exactly what I'm seeing. My paid subscribers get a lot from me. They can write questions. I'll do the charts for them and so on. I won't do it for just the John Q. publics. And I don't say that in a negative way, but people that pay me get my service. Go to your doctor. He's not working for free. Give my staff a call. They'll get this to you. We send it by email. You can go to iraepstein.com. It's in the free offers. You can move your cursor up here, free offers. Look for it there and get it. I'm Ira. You have a great trading day.